All right, traders, welcome to today's end of day and end of week recap. This is Christian Promhertz, Tribeca Trade Group, and of course, it is Friday, September 23rd. And, obviously, it's been a long week. I will be getting a beverage or two, probably Oktoberfest, same as I did last Friday. But, don't forget to do that type of thing. It doesn't have to be drinking Oktoberfest beer, something of a favorite of mine. But it's important, especially with these weeks that we're seeing. This was a very heavy week in terms of the price action and a lot of events, right? I mean, we had a big event this week with FOMC, and we've got one more week of September, so it's important to kind of get away from the screens a little bit. Making sure that you're not getting worn out and frustrated, and sometimes out of frustration, trading bad decisions come out of that. So I wanted to mention that first thing in this video, that this has been all around. This year has been a very challenging year. Long, short, doesn't matter, I think. So hang in there. I think that make sure that you do get away from the screens, and we'll talk a little bit about that seasonality in just a second, as I had a couple traders have some questions or some statements that I thought were pretty interesting today. So number one, let's talk about today's price action, right? I mean, the breadth was it's like a broken record at this point, but another day with the breadth, just ridiculous. And right from the start today, right, there was no question about it. From where we started the day, nasty breadth, and we got worse as the day progressed, right? We can kind of see this if you look at the 5-minute, right? But you could see how we opened up, and that's what I mean. I mean, this is very heavy, right? This blue line, I think, was like a -10. We got pretty extreme around there, around 2:30 today. We're -28 in breadth. That's pretty rare. We've seen that a couple times this year, right? And you can kind of check it out here, and back in here we saw really negative breadth. Here we got very extreme. So it wasn't as extreme as those days, but altogether, it's been the situation where I think it's been 9 days in a row or something like that, where the breadth has just been really ugly. And that gives you a sense of like how the day is going to basically unfold. Remember the analogy that I always use, but when you've got very poor breadth like that, the wind is in your face, right? In terms of if you're looking for longs, right? You've got so much heavy selling pressure. So that peaked out around 2:30, and then we did see a move back to finish down. S&P futures say down 1.6%. SPY says the same thing, right? Q's down identically for some odd reason, 1.63, and the small caps underperformed for the day. They also didn't come back as strong as the others. Diamonds were kind of interesting too. Is not something that I talk about in every one of these videos, because they did break those lows. When you go across and you start looking at different sectors, different areas of the market, right, you can basically say yes or no whether or not they took out the June lows. And I think they did, but they may have come back by the end of the day. Yeah, we actually took out this version point of control down here. So that's another one. We've seen a bunch of these being taken out. Sometimes we do get nice reversals off of them, but it really depends on the conviction in the market and the selling pressure when we hit one of these downside VPOCs. Sometimes we could see a nice reversal off of them. We took out a number of them this week, and we didn't really see that. It was just too much selling pressure. So again, version point of controls remains something to kind of watch when we take it out. Oftentimes we can see a reversal, but it's certainly not every time, and it's not 100% guaranteed. So yes, so we did come back here, right, for the diamonds. Again, 30 stocks in this one, but we'll have to kind of see where that materializes. Also, just other performance for the day, and then I'll move on to the week. But if you've got an explanation for this one, I'm glad to hear it. But the home builders outperformed. They actually outperformed when I get to the performance for the week. They actually outperformed for the week too. Really odd, because you would think that would be one of the worst hit areas. Again, this market will keep you on your toes. It doesn't always do what the logic says or what the conventional thinking is. Remember that sometimes the market likes to hurt the most amount of people, right? Especially if the popular thinking sometimes. So home builders still finished the week, by the way, down, but they actually outperformed when you look at other areas of the market. Speaking of other areas of the market, anything commodity really broke down today. So we're going to talk about, again, I'm going to try to keep this video somewhat short, but we'll kind of talk a couple. While there's many more negatives, I think, right now in this market, there are some positives. So I will do a little bit of pros, cons. So let me start with this before we kind of dig into the commodities charts. But I just want to say, preference this in the beginning of the video, that next week is one of the, I think it is the weakest seasonal week of the year, right? We've talked about before that September is the weakest month of the year in terms of seasonality, and then in a midterm election year, things do improve seasonal wise once you get through some of October and then looking to the end of the year. Now, again, that doesn't mean that we follow that pattern to a T. This is a very different year. So it's one of those things to kind of keep in the back of your mind, right? Just as we said entering into September that this was probably going to be a tough month. It has been a tough month. That is playing out, but we don't know if we're going to get the positive yet. And I think that the way that we do our analysis, right, we're not just kind of making a judgment, just here or there. We really want to see some confirmation. So what would confirmation look like? If once we get through September, through next week, and I can't tell you, of course, what it's going to be. I could just tell you that we do have that weak seasonality, but keep in mind, what are some of the events next week? Well, it's going to be end of month, right? So, there could be some type of rebalancing that goes on. We're also going to get the PCE deflator at the end of this month, right? Is that going to tell us anything? Is that going to tell us that inflation has started to come in, right? So we kind of have to stay tuned for that. As I've said before in these videos, I am not a predictor of what these inflation reports do. I don't look and, survey what rent has done and so forth. So it's going to be, of course, we can have a view going into that, and we could look at some of the components that are easier to read because I don't analyze rents. I don't know what the employment data is really going to show. We, of course, have the recent data, but that's about it. It's as far as I really take it in my analysis. But we do have that next week. So, that could be particularly pivotal, right? In terms of that number comes on Friday, by the way. And we do, if we want to look at the economics really quick, certainly we can do that. And let's bring make sure this is on. Yeah, it is on economic releases. But you get GDP as well. Like some people really like to analyze that. I am not one of them because GDP is a lagging indicator. So it will tell you what happened, so it's great for to talk about at cocktail parties and that type of thing, but it really has normally no implications. Remember, stock prices, equity prices are much more forward looking, right? In terms, it's a leading indicator rather than what GDP is. But here's the number that I'm referring to, PCE deflator, right? It's also very widely looked at by the Fed. They actually like this indicator. I know everybody in the market certainly reacts to what the CPI does, but this, has the potential to definitely move the market as well. Again, coming at the end of the month, right, on Friday. All right, so that's the one thing. So, that's something that's not a pro or a con. That is just something that we're going to have to watch out for. I started to say, what are we going to be looking for, right? So let's first talk about, let's go to crude next, right? So number one, I think so we'll put this in the bucket of positive, right? And then we'll talk about some things that we're going to be looking for next week and maybe the week after. But notice that this took out the low, right? So I would say that this is a good thing, right? We want to see things like this, which is a small portion of the the inflation numbers, but commodities does go into that. And we've got kind of a decent breakdown here. Remember, we got rejected here, right? It took a few days, but it got rejected down there, and energy names really underperformed today. They did come back a little bit from the lows, but where could this be going? Probably, there's going to be some support around 74 in crude. So that's another $5 down. That's something that you can kind of watch out for to the downside. That's halfway between, where we are now and the VPOC on the daily as well, which is at 71. All right, so that's definitely a plus. So now let's go back to the equities just for a second. So yes, one of the things to note here is, we did come in here and test the June lows. Is this a double bottom? Well, we don't know that yet, right? We have to wait for more evidence of that, right? Just because we're coming down and testing this, we have no confirmation that this is a double bottom. One of the things I will be watching next week is what if price actually does get back above the 5-period moving average. We have not seen anything of the like so far. Again, right now the trend is down, even though we bounced a little bit at the end of the day. We are also getting pretty oversold. The RSI is now at 29 in the indices. Note that we really haven't seen, in here, way back in here, we've seen the indices get past that, I think around like a 24. But once you get to a 30, just indices are a little bit different than single stocks in regard of being overbought or oversold. Single stocks can stay overbought for a long time. Equities the indices, they can get definitely more stretched, to the downside than 29, but it's not frequent that it happens. And you could look at my chart, you could look at the RSI, looking at S&P futures, right? So again, here was the time here, notice of course that we did bounce off of that and then ended up taking, another leg lower. But, you could go back and look at other times too, right? It just doesn't happen that often, right? Same thing on the overbought side. So that's one thing that I think is interesting that we just barely got into there. Also a chart that I posted as well, which is NIMO. You've heard me talk about this one, the McClellan oscillator. It is getting pretty decently oversold here. Now, remember what happened the last time that this got oversold, right? The market didn't just start going up right away. In fact, the first time that I mentioned this, that it was getting to these levels, it actually got a little bit worse. So I was a little bit too early. I was like a day or 2 days early from the time that I started to say that this is getting oversold to the time that I was really adding, adding risk. I was a little bit early. I thought that we could get that we would see a bounce, and I think I may have added risk a little bit too early for that. But this played out pretty well for an oversold bounce. So we're around this territory again. No confirmation that that's turning yet, but it's pretty darn near close. So I think some of these things are positives. Short-term things that could shift things a little bit, but we have no confirmation, right? And also it's important to realize too, once we get out of September, right? And I think I've already said this, but I want to reiterate it, right? It doesn't mean that we blast off to the upside, right? We've got a lot of things going on. We've got a lot of nasty situations going on in Europe, right? We've got a lot of names that are suffering right now, right, with the stronger dollar, right? How many names are going to come out for earnings and talk about how the stronger dollar is, how much are companies going to have to write down, right, with the stronger dollar, because it is blasting off to the upside. So this is this is a con, right? This is a negative to see, what's going on here in the US dollar. I mean, this is going up now with a vengeance. This is now overbought. Could it go parabolic before it starts to, maybe have some type of a blow off top? It could, right? So we've got no confirmation other than, hey, this is now an overbought territory. Again, what's important is for the price to get back below the 5-period moving average. We don't have any of that confirmation. This stronger dollar right now is not a good thing. Now, what do you think is going to come next in my analysis? Well, if you watch my videos, the two major things that I talk about, other than, what equities are doing, are the dollar, and also bonds. So very nice hammer bar. I was kind of puzzled yesterday after this big red bar yesterday, after a solid move down, that there was no major buying the dip at all at the end of the day. We got that today. There was another severe move in interest rates again from where we were in this morning, but buyers did actually step back in. So again, this is the 30-year bonds. Sometimes I get questions, hey, why do you look at this versus the 10-year? Well, it's just a little bit more volatile. So I tend to look at the most volatile thing, in treasuries, right? And that's kind of the furthest out in maturity. So the relationships are mainly the same. If you want to look at the 10-year futures, it's kind of saying the same thing. Big downtrend, but a hammer bar today. So the important thing when you're analyzing the candlestick patterns is to realize that one day doesn't make a pattern, right? Usually it's 3 days. And sometimes you could see really interesting one-day candlesticks, but there's no follow through, right? And that's why we use the 5-day moving average, right? Because if price starts to get above there, then you could say, okay, we're onto a reversal. But as of now, we don't have that yet. All right, but these are the main things to watch next week. So what else will we be watching next week? So again, we don't know if this is a positive yet, because it's a start to see a hammer bar there, but I really think that we need to see the pressure off and interest rates start to come back down. Same thing with the US dollar. And also we'll need to see some confirmation and some things start to outperform, right? So when we look at the performance too of this week, nasty, right? The only thing that was green on the sheet was the US dollar, and that's a big move, up 3.1%. SPYs were down 4.5%. Qs were about the same, and small caps underperformed. International areas pretty ugly there too. EFA, which is international developed markets, Japan, Europe, down 6% for the week. Bonds finished down basically the same thing as they did last week, down about 1.3%. Gold was down. Value growth didn't really matter this week, both down 5%. Again, very odd to see the home builders, even though down for the week, out underperforming. And then some of the other defensives outperformed. The staples, the utilities, the healthcare, still down for the week, down around 3% for the week. But you look at the right side of the column here, and the areas that underperform got smashed. Oil and gas exploration production, remember that's an equally weighted ETF, down 13% for the week. I don't know how that relates to pot stocks, but they were also down. If you could find a theme between energy and pot stocks, congratulations. I can't. But they were both down 11% for the week. And then solar, which was a leader of this market, was down 11% for the week. So really getting hit there. And then a couple other areas too, smoked, right? I'm running out of adjectives, but there you go. Brazil was actually up this week. That's a definite outperformer. And then you can see the rest of your international performance in here. So I'll leave you guys this for the weekend. I'm not going to go over any individual names here in this. We do that over the weekend for members when I go ahead and put out my watch list for the week. But really, we need to see some things. We need to start to see some signals, right? Remember what happened when we were, let me just move the charts, but interesting how similar some of these bond charts look to the equity charts. But remember when we were in here, going back to June, we started to see certain areas of the market actually act better, right? One of them was biotech, right? We were all over this, right? Biotech actually bottomed first and then started to lead the market back up, right? And really outperformed, right? So again, with this thing stalled at the 200-day moving average, right? So what we want to see is some more clues like that over the next couple days, could be couple weeks as well. Patience is the key, right? These things, as we do our analysis, will jump off the page to us, right? Because we're used to doing this type of analysis and finding these little nuggets of, pieces of the puzzle that are standing out. And we don't have that yet. It's too early. So be patient. I think there'll be some interesting things to develop most likely over those next couple of days, weeks, we'll see. You can't force it. You got to kind of just take the information as you get it, and then make some key decisions off of when you do get the signals. So I look forward to that. Thank you very much. If you could like the video, subscribe to the YouTube channel. I've been getting some good positive feedback from you guys. A lot of you gave me some information about that McClellan oscillator. I appreciate that, and how you can track that intraday. So I love that type of feedback and help as well. And look forward to seeing you guys back on Monday if you're not a member of Tribeca Trade Group. By the way, if you're not, you want to check it out, try it for a month. Let me know what you think. And again, I appreciate that feedback as well. Have a great weekend, everybody.